Let's begin with Hilton. Why did Blackstone want to buy Hilton in 2007?
Well, look, Hilton was a bit of an unloved gem. Hilton was trading on the stock market not at great levels relative to other folks in the industry. And when we looked at the company, we said, wow, look at this amazing real estate. Here you have the New York Hilton, great owned real estate. You've got the Waldorf Astoria. And also, you had these incredible brands. So you had not only Hilton and Waldorf, you had Hampton Inn, you had Homewood Suites, Doubletree, great brands that were growing in the U.S., but really hadn't been delivered to the rest of the world. So we said, if we brought in the right management team, could we accelerate this growth? Could you take a great American company and expand its footprint even more? And that's what we've done.
Just with that list of brands, that is so much insight into global business travel around the world. So what is happening with business travel?
Well, business travel, despite the really tough economic climate out there today, is better than you'd expect. I'd say we're cautiously optimistic. Obviously, if there's a sharp pullback in the economy, that would create a risk. But today, things are a little bit better than you might expect.
You don't just specialize in business travel, you also do a lot in the travel and leisure sector. I know that you own SeaWorld. What are some of the other brands that you own?
Well, across Blackstone, we own a range of things. So SeaWorld, Busch Gardens, Bird's Eye Foods, a range of companies out there, Michael's Stores, that service the consumer. And I would just say around those brands, consumers probably a little more cautious than the business traveler is. They are traveling, they are spending, but they're very focused on value. Given what's happening in the economic climate today, no surprise. If you deliver to them the right product, the right price, you can attract. We're seeing some growth, but I'd say it's a little slower than what we're seeing in the business area today.
What are you doing for these companies in return? Like, why do they want to be owned by Blackstone?
Yeah. Well, look, I think we have a type of capital that can deal with things that need to be fixed. What we like to do is come in, buy either real estate or companies. We see something the world maybe doesn't see. We see an opportunity to grow something faster, to invest capital, fix whatever that is broken, and then sell it. And if you look at some of the things like here in New York on the real estate side, we bought the former New York Times headquarters building. It was completely vacant. The owner was struggling. We're going to spend $50, $75 million, release it, and then sell it to a long-term owner. And when we do that, if we do it well, we'll generate a good return for our investors who are primarily pension funds. And that's our basic business. Come in, bring in this sort of risk capital, generate favorable returns for our investors, and then sell the assets. And if we do it well, it's a good formula for everybody.